What's up everyone? Welcome back to Adam Theory, where we talk about investing, startups, and life in general. It's been a while since my last video. I've been spending some time thinking about a topic that would be helpful to others, and so I think I finally got one. I've been investing in the stock market for over a decade, but I've only been a trader in the markets for about 5 years. Now you might be saying, what's the difference between a trader and an investor? Well, in my opinion, and this is just my opinion, investing is easy. You find a blue chip asset like Amazon or Facebook and put money into them and never touch it. You set it and walk away. Trading, however, is a whole different ballgame. You need to be emotionless, analytical, know the game theory, have a plan, and always be on your toes. Now, what I've seen over the last 18 months in the stock market is two primary patterns arise. The first is the people on social media that seem to be the expert traders. These people came out of nowhere and are killing the game, or at least that's what they want you to think. They pick no losers, and they always have the next big moonshot ready to pump. The second trend that I'm seeing is millions of people that are now seemingly considering themselves to be day traders on their Robinhood accounts. From my perspective, I love the fact that these people are out there looking to invest and see it as a new hobby. But I'm also worried that there are people out there that are misguiding these traders. Because the truth of the matter is that for every big win that a trader might have, they've likely given it back in a handful of bad trades after the fact. The stock market is an elegant form of a casino. And for many people, I think they trade it the same way. Now, before people get upset and think that I'm attacking their trading skills, I want to ask a quick question. How many trades do you enter where you know what the company's mission is, how many employees they have, where they're headquartered, what their P&L is, what their EBITDA is, or who their CEO is? Because if you're a great trader or a great investor, you know those things before you pull the trigger on buying stocks of that company. Now, on the flip side, how many trades do you jump into because you saw it on Wall Street Bets or on some YouTube person's latest video and blindly follow the masses trying to ride the next wave? The point that I'm trying to make is this. If you jump in on those trades knowing that you're looking for a quick 5 to 20% gain, more power to you. But the fact of the matter is, greed overrides many logical emotions, and what generally happens is the following. You see a post or video pumping a stock. You wait a day or two to see if it has any legs. You finally pull the trigger on day 3 because you don't want to see the price run away from you. You feel great since you see the price heading towards the moon. You say to yourself, hey, that was a quick 10%, but wouldn't it be nice if we wait a little bit longer? I bet it'll go to 20 or 30%. But the next day the stock drops and now you're down 5%. Now you're thinking to yourself, well, if I wait a day, it'll come back and then I can get out then. So you wait another day, but now it's down 10%. So you think to yourself, now I need to wait and see what other people are saying about the stock. Should I hold or should I sell at a loss? You go on and you see these people say, hold, buy, be patient. Don't give up, have diamond hands. So you do, and you wait, and you wait. Sometimes it works out, but oftentimes it doesn't. And do you have a plan to get out when it doesn't? And do you have a plan to get out when it does? Or do you let the greed cycle start all over again? My point is, it's not that easy. And so if you're gonna jump into these trades blindly, you need to have a way to get out of these trades too. So this video is for you if you've ever found yourself in a situation like this. Oh, and just so you know, I've been there before. That's been me many times over. So learn from my mistakes. Over the past 5 years, I've become a more serious day trader and I've learned many lessons the hard way. And in the investing world, when you say you learn the hard way, that means losing money. I've lost a lot of money in the early days of trading. And in the business, I guess they call it tuition. The important part about paying tuition, though, is the hope that you don't have to pay it over and over again to learn from those same mistakes. One of the things I learned pretty quickly is that I need to write down my mistakes and my wins in a journal. So I have a trading journal. It's old school pen and paper because I retain things better if I write them down. It's nothing fancy, it's just a random notebook. And on the inside of my journal, I have my 7 rules of trading. You can see them right here, and I'm gonna go over each and every one of them and why it's important to me when I make my trades on a daily basis. Rule number 1 is to be patient. There are 253 trading days in a calendar year. There is no prize for executing a trade every day of the week. If you're trading with that amount of velocity, you're probably going into trades unprepared. The professionals don't even trade that often. Most of the time they're doing research and planning for their next perfect trade. I repeat, their next perfect trade, not just any trade. Rule number 2, no FOMO. When I first started trading, I would jump in on trades last minute all the time. Sometimes it will work out, but more often it will lead to a 5 to 10% loss on that position because I'd come in too late and I wouldn't have a plan on getting out. If you're hearing about it from everybody else, it's too late. And as a result, this ties back to rule number 1. Be patient and do more research so you can be in on the ground floor of the next FOMO stock. Rule number 3 is take profit. This also ties back to rule number 1 and 2. In many cases where I wouldn't be patient or I would have FOMO, I could still have made a profitable trade if my lizard brain didn't kick in with a thought of, I can make more money if I just hold a little bit longer. 90% of the time I jump in late on a play, there would be a short window where I could come out with a 5 to 10% gain on those trades. But I'd wait too long, get too greedy, and I'd see the wrong side of those plays play out because I was just on the wrong side of the momentum. I was part of the people holding the bags. Rule number 4, don't be greedy. Are you starting to see a pattern here? If human nature wasn't full of greed, the stock market wouldn't be so fun. Rules 1 through 3 all have a foundation in greed. I lose patience because of greed. I experience Fomo because of greed. I don't take profit because of greed. Don't be greedy. I'll be honest, this is the hardest rule to follow, and it's the rule I probably break the most often. And I know it'll always be the hardest rule, no matter what, and no matter how long I trade. Rule number 5, learn from your mistakes. In the first couple years of trading, I never wrote down my trades, so I had the memory of a goldfish. And as a result, I made the same mistakes over and over again. I think Einstein put it best. Insanity is doing the same thing over and over, expecting different results. If you don't learn from your mistakes, you're insane. Okay, that's a little bit harsh, but you get my point. Write it down so you remember and so you don't do it again. Rule number 6, the market doesn't care about you or your goals. The sooner you can realize the market is rigged and we're just going along with the flow, the better. The trick is making sure you're going with the flow when it's going in the direction you want it to head in. When the market crashed in March of 2020, everyone and their mothers knew the economy was in the tank, yet the price of shares soared and recovered within 2 months. Logical people would have said the recovery is going to take years, but the market recovered in weeks. The market doesn't care about common sense, so just keep that in mind when a thesis you have about a trade doesn't play out and you can't figure out why. The markets can remain irrational longer than you can stay in the game. Finally, rule number 7, lucky number 7, live to trade another day. Chances are, if you're watching this video, you are young enough to have many, many more trips around the sun on this beautiful rock that we call Earth. You don't need to build your portfolio overnight. No matter what you see on YouTube, TikTok, or Instagram, most of those people are either lying or one bad trade away from pissing it all down the drain. The truth of the matter is, most successful investors and traders are methodical and robotic. They have a process and they don't deviate from it. Give me consistent base hits all day, every day. I'd rather have that and avoid the strikeouts of chasing grand slams. I'd love to say that these are the only rules I'll ever have to live by, but I know for a fact that I'll make more mistakes in the future and I'll have to continue adding to this list of trading mantras. Each time I add to this list of rules, it's because of a bad trade that I've made and I had to learn a lesson the hard way by giving back profit. So don't plan on being perfect, no one is. If they say they are, they're lying to you. But imperfection means you have a chance to learn from it. Maintain a trading journal, get better, get smarter, and make more money, and retire earlier. If you follow these 7 rules, it might spare you a mistake or two that might cost you hundreds, if not thousands of dollars in the markets. Anyway, that about wraps up what I wanted to talk about in today's video. If you enjoy my content and want to support the channel, I would really appreciate you subbing, leaving a like, or dropping a comment. It goes a long way as I try to grow the channel for others to enjoy. Thanks again for joining me on Adam Theory. Stay curious, ask questions, and build your own theory. Thanks.